What's going on, everyone? Welcome to Moo Moo Trades. If you guys are new to the channel, get ready for a great video. We're going to go over the S&P 500 E-mini ES futures. The platform I'm using is NinjaTrader, and what we're going to do today is just go bar by bar and go throughout the trading day so you guys can see all the trades that I see set up as the bars are printing, and I'm really just going to explain my mindset as the bars are printing live, and I'm going to explain what positives I see, what negatives I see in each setup. So let's just go for it. Right now on the right side of the screen, it's about 6:17 Pacific time. So this is usually when I sit at my computer, and the first thing that I do is always just draw either a range setup or trend lines or whatever there is to really just give me an idea of what prices are doing. And at the end of the day, prices are just a language, and the bars on the chart just give us a way to interpret this language. The reasons that these trend lines and trend channels work is because other traders all around the world are using the same thing, and the trading method that I use is a scalping method, which is really just playing on the psychology of the market to identify high probability setups. So I see this mini short-term uptrend, and the rules for uptrends or downtrends or any trend is it's not over until there's a break and a new test at an extreme. So right now there's a break, but we're still expecting to test this level 4,034 until we can safely look for short opportunities. But until then, we're just gonna wait and see what happens. And right now we see at market open, there was some bearish momentum, and I will explain to you guys when I see the first nice setup. But as we can see, we did eventually get the test at a new high after some congestion, but we're still in this range. So we just want to see what happens and see if prices are going to react to these highs. And we see a new high after another short-term uptrend, break, new high. We're testing this level again, so we can at least start thinking in our minds there might be a reversal in trend. And these come in the form of second entry shorts or failed second entry longs, and I will explain what that means as we get a setup. So we did finally have one last push up, followed by a new high, very bearish bar, strong push below the EMA, another test by the bulls attempting to go long, but as we stated, because this trend already had a break and a new high, we really don't want to look for long opportunities anymore, especially because we are reacting to this upper side of the range. Now, because we have several bearish bars followed by a lower high, because as we see, this high created a new extreme of this range, we pushed down and we had a lower high rejection looking bar right here, and this was actually my first trade of the day, and I did have to ride out another bar, but you can even go short following this bar because it's just another failed attempt by the bulls, double top, and we ended up the trade ended up working for a scalp. Now, in this short-term downtrend, we also had a break and a new low, so we want to be wary of any more shorts just yet, because at the end of the day, if we zoom out, we can see that we're just in a big range and a lot of confusion in the markets. We can also see that we pushed below the EMA and we pushed right back above the EMA, even though in a healthy trading range, if we're at the top, we expect to reach the lows. So we expect to reach the lows of the day, but we obviously kept pushing up, signaling maybe the trend, the range isn't valid just yet, and there is a sort of bearish imbalance or bullish imbalance, however you want to see it, signaling that there are more bulls than bears in the market because we keep pushing higher. But right now, I really don't see any very high probability trades. But with that said, we always want to draw our short-term trend lines. We had another short-term downtrend, a break, and a new low. Other people might get trapped because a lot of times, say you have this downtrend, which looks very valid, and you see a break and a new low, and you see another lower high. So beginner traders always like to just adjust their trend lines to fit the price action, even though it might not always be the most accurate. So you might keep trying to adjust the trend line to look something like this, but what you really want to do is always fit your trend lines to just have the most accurate representation of what prices are doing. And we can clearly see that, look how nicely this trend channel fits these prices. We have a break, a new low, followed by congestion, which we expect to see. So now we can start looking for a potential reversal again. But we see that we just didn't have many very high probability setups. But now we can really see that this trend channel is probably not valid. And what we really might have is some sort of weak uptrend, something that looks like this. But this trend channel is really just something to give us a visualization of what is going on, because the lows of the day keep getting higher and higher, and we can't seem to push below a certain price level. So now we really want to just sit on our hands and wait for the high probability setups to appear. And we see that we have a little mini range, mini congestion here, but it's a lot of choppiness, and you really just want to stay out of that. We finally do have strong bearish momentum, so we want to draw our short-term trends again. And we have a break followed by a new low. And you could argue that because the downtrend really started up here, the trend line might be something like this. But once again, the wider trend lines in these sort of range, choppy looking days, the high probability setups really come from drawing your short-term trend lines. So we have a break, maybe not a new low just yet. We have a second entry short right here, which are very high probability setups. But because we are really just in the middle of this range, and this bar isn't touching the EMA, we're a couple points away from the EMA. I would have liked to skip this trade. It would have worked out, but just to explain what a second entry is, we count from this new low. We have one leg up, and as soon as this bar on the right side broke below the one previous to it, that creates a first entry short. And when the next bar broke above that, it created a second leg up. So if the next bar breaks below this bearish one, that creates a second entry short, because counting from these new lows, we went up, we had a first entry short, we went up again, and we had a second entry short. But now we can really be confident that this downtrend could potentially be over because there was a break and a clear new low. So we just want to avoid any short trades until a strong trend resumes. And even here, we can see that we actually have a lower high and a failed second entry long. So we're at this new high, we went down, we had a first entry long because this bar on the right side barely ticked above the one previous to it. We went down again, and we had a second entry long. And in downtrends, we want to look for second entry long failures, but because these prices are so choppy, we had a break in a new low. We really want to skip this short as well. It would have worked, but it's risky for those reasons. Now, you could have Now seeing this as a wider downtrend because prices are reacting to this trend, but I really would have just liked to stay away from all that choppiness and wait for a better setup, which we will see coming up. There were a lot of high probability setups today. We just had to be very patient and sit on our hands and wait for those setups to really appear. So now we can see we had a clear break, new low, even if you wanted to draw this wide trend. So now we want to look for high probability setups in the long direction. We see that we keep having higher lows after another attempt by the bears to go below the EMA. Now, once again, we can zoom out and really see what's happening. We're right at these lows, but the kind of theme of the day has been not being able to reach the very extreme lows of the day down here. And once we had this strong push up, followed by a push down, not reaching these lows, followed by multiple more legs up, with each low being higher than the one previous to it. We had a low here, the next low was higher than that, the next low was higher than that, the next low was even higher than that. Now we can be confident that, okay, I think prices are most likely headed in the upward direction. Let me see if there's any setups. And I actually did take this long right here for a couple of reasons. I counted this new low as a double bottom, so we went up. We had a first entry short. We went up again. We had a second entry short right there that did not trigger, but the failure. Let me slow down one sec. So in downtrends, we want to look for failed second entry longs. In uptrends, or at least when we expect the trend to start going up and reverse from this downtrend we were in, we want to look for failed second entry shorts. So we're counting from this new low. We had one leg up, a first entry short, another leg up, second entry short. So I was really looking for this bar to have the next one break above it, creating the failed second entry short. Now, because that did not happen, I wanted to wait for another higher low, which then happened right here with this engulfing bar. It is a little bit risky because engulfing bars are just always a little more risky than non-engulfing bars, but I was confident that we'd at least test this high because we had a strong push up, a break, and no new high yet, combined with the fact that we kept going higher and higher and higher with these lows, and it turned out to be a very nice trade. Now we can once again think to ourselves, okay, we had a break and new high, but prices still look very choppy. Let me just wait for trend to resume, and when I can actually be confident that I know where prices are headed. Because right now, they're just going all over the place a little bit. But if we see a nice setup, I will let you guys know. We do have a second entry long opportunity right there. If we draw our short-term uptrend, we have a new high, we have one leg down, followed by a first entry long because the bar on the right side broke above the one to the left of it, another leg down because this bar broke below the red bearish one. So if the next bar breaks above this one, then it'll create a second entry long, which we always look for in uptrends, and it would have worked out. The one thing I did not like about this trade is that it is a little bit away from the EMA, and we are right around these highs, so it's not a textbook trade, but knowing that we are in a bullish imbalance, that all the lows keep being higher than the previous ones, you can argue for this trade it is more aggressive, but let's see if we can find any much more high probability setups. And we do have a failed second entry long right here. However, you would be going right into this low, and you're following a lot of congestion, so I would have liked to skip that trade as well. Actually, it would have been a third entry because counting from this new high, we went down. First entry, because the bar on the right side barely ticked above that one, we went down again. Second entry long. You can look at this as a second entry long failure or a third entry long or a lower high following a second entry long failure, but just the fact that you have to make that discernment just shows that you should probably skip this trade, especially because you're getting near these lows, but would have worked out this time. And now, this trade right here, I also took simply because we had a lot of bullish momentum and we just had a higher low right at this area again where there was some buying pressure. And that combined with the fact that we once again did not break, or at least not have a significant downtrend following a break to the downside of the EMA. So once we had this lower high with a very, very bullish bar, I was confident that that trade would have worked out to at least go to the top of this range. And we ended up really finally having that continued momentum that we'd been expecting all day. And now it's getting towards 10 a.m. Pacific time, 1 p.m. Eastern. So at this point, the market usually does slow down a bit and trades get a little more risky. But they kind of just, prices kind of just continue to do what they had been doing all day. And there weren't very great setups. But that's going to wrap up the video. Let me know what you guys thought. Give me some questions. Give me some comments. Give me a like. And hope you guys enjoyed the video. Peace out.